Hey, it's Todd Ault, and welcome back to Wall Street Words. Today's word is warrant. Now, when you're buying a stock in a private company or doing a private placement, generally you can get warrants depending on the transaction. What does the warrant allow you to do? Let's get a simple definition here so that everyone can understand. So let's say you're going to invest in company Y, and you're going to buy their stock at $2 a share. They may issue you a warrant to buy another share at $4. And they may give you the right to buy it for up to 5 years. That's called a call warrant, future value. And now you have the right to buy it, but not the obligation for 4 years or 5 years, however long the warrant is good for. This is considered an equity sweetener. Now, if you have a warrant at $4 and the stock goes to 10, and you could sell it, you may want to buy it at 4 and sell it at 10 and make the profit. Now, generally, the company gets the $4 a share, you sell it for the 10, and the $6 profit's yours. Warrants are a very important part of financial structure. I bought warrants myself privately. I participated in transactions where I got warrants and deals, and they can be a big sweetener in making money. Really, for the shareholders, for the company, it's a great way of raising extra capital and allows the investor to have upside for the risk they take. Today's word is warrant. Hey, thanks for watching Wall Street Words. New words and terms delivered every single day. Please subscribe, push the bell. If you found this information helpful or you think someone could benefit from this information, please share this video. Thanks for watching our channel. Always good things happening here.